Hello, everyone. Welcome to our podcast with the working name Talking Markets with David Prince and Jesse Martin. This podcast is a long time coming. We've been talking about doing it for about 2 years. And this is my good friend David, who I met virtually 3 years ago, or 4 years ago now at this point, and is my mentor into my foray into trading professionally. And David, why don't you say a little? Yeah.
Yeah, I met Jesse through a group that I began on the internet, so people can kind of share idea flow and learn a bit more about the markets than your average Joe. And Jesse and I quickly formed a relationship, became dear friends, and by watching his success, it helped me think about how to actually help others. And we formed a really great relationship. And because he's so enamored with the podcast medium, you always thought, this might be a good way to share what you do and expand your reach. And we've chatted about it for well over a year now, and here we are.
Yeah. So I think a lot of people would find this podcast, either they know me through gambling, or they know David through Twitter and through his many different things he's done in the investment world. So just for our first podcast, I figured we would both give a little introduction on ourselves for the people who found us in the opposite way. So for me, I have been a professional gambler since I graduated from Syracuse in 2002. I never got a job. I just started playing poker for a living, and kind of slowly worked my way up to the highest stakes of poker. And I won 2 World Series of Poker bracelets, and eventually played the highest stakes in Bellagio, and really, across the world against all the people you might know: Doyle Brunson, Phil Ivey, Phil Hellmuth, and really anyone else. And I loved poker, and I didn't think I would ever do anything else for a living. I was always all in on poker. And I got lucky, and I also started playing daily fantasy sports around 2016 or so. And I won the 2019 DraftKings World Championship for $2 million, so now all of a sudden I had 2 careers, and I was feeling good. Everything professionally was really good. And then COVID hit. And so COVID hit, and I didn't have anything to do for a job. And I did have some money in the bank for my recent big score. And I had a buddy who I was in touch with, and who's into kind of all the same things I am, except he was also really into investing and trading. And thanks to him, not David, I hadn't met David yet. He said, "Hey, you should probably be paying attention to the markets. At some point here, we're going to have like what I think is going to be a generational buy in the markets. They can't keep going down forever." So I started waking up with the market in on the West Coast at 5:30, 6 a.m. every day, and paid attention, and took my buddy's advice a little bit and started trading. And eventually found that there's all these chat rooms, and all these people out there willing to give you advice on the markets if you pay them, basically. And through one of those chat rooms, that's how I luckily, thank God, met David. And David was just a member of a room. He'll tell you why he was a member. He wasn't really there to follow anyone, but he was there for the community and to get some idea flow. And he just stood out like a sore thumb as the guy who knew what was going on. And so paid a lot of attention to David. And then we finally, started messaging on the side, and I realized we had a lot in common, both East Coasters, both spent a good amount of time in New York City. And yeah, David really. So like I said, I'm in all these different chat rooms, kind of like poker. I was in all these different training sites, and daily fantasy. I'm on all these different training sites, and I kind of took the same approach to the stock market and tried to learn from people smarter than me. And Yeah, so but David has just stood out as the guy who knows more than anyone else and really brings a unique perspective, which is why I thought starting a podcast. I mean, whether it was me who started a podcast with him or someone else, I felt like he has what it takes to for this type of medium, because he can offer a different perspective than just looking at the charts and telling you where the moving average is and all that kind of stuff. So yeah, I guess that's my quick introduction for those who don't know me, and I think David will give his now.
I thought it was darn good personally.
Thank you.
So I come from a bit of an unorthodox path to the stock market. After college, I went to a Vassar college, and I decided I was going to be a nightclub owner and maybe a hotelier. And I fancied myself as the next Steve Rubel or Ian Schrager. And I had a nice run in New York with quite a few clubs, and I was a little more focused on the women and the notoriety than I was the money, but it was a nice run. And then one day I said, I don't think I want to do this forever. I don't think I have it in me. I'll be exhausted. And I thought, okay, well, I made a lot of money. Where can I make money like this and be my own boss? Because I'm kind of pretty successful already, but I don't want to start from the beginning. And I hadn't gone to business school, and many friends were off to Goldman Sachs and different wirehouses and venture capital firms. And I said, wow, if I got to start over, I'm a little bit behind the eight ball. So I said, well, got to learn from the bottom up. And I chose a job that I knew I did not want to do, but it was my entry into the finance world, and I became a stockbroker. Did it with some smallish firms. I wouldn't say they were boiler room type firms, but certainly not household name Morgan Stanley, Goldman Sachs type firms. But in doing so, it allowed me to get big pretty quickly in terms of the amount of money I managed, how I did it. And I also got to know corporate finance. And during the internet days, I was lucky enough to own paper, meaning warrants and stock in smaller deals I had done. One or two of them went public to much fanfare and had these miraculous runs during 99, 2000. And I made more money on paper than I ever dreamed of. I was like, oh, okay. I think I understand the stock market or where I want to be. I need to own these companies, not trade them, not guess about them. I need to back them. I need to be in this venture capital, private equity world. And I was still learning, but I was like, oh, this is how real money is made. This beats being a stockbroker. So long story short, to move on, I met some people that were dear friends of mine for 20 years, but that had gotten very large in the business. And one of them was one of my best friends. He and his boss, who was the largest broker, Payne Weber, started their own BD, little merchant bank BD. And they said, come join us. I said, oh, you're my friends. I can't work with you. I said, if you make me a partner and I can be a part of it and I can get paper, because again, I've now learned that owning equity in these companies before they go public is phenomenal. I said, that's the only way. So I asked them for some absurd deal that I thought they'd never say yes to. I was just sure of it. I was like, all right, I'm going to work with these guys because they're dear friends. I'm going to ask for some crazy amount of money and equity in our deals. They said yes.
Can I interrupt real quick? Did they say yes because they already recognized your talent at that point?
I think they had seen, my guess, and I really don't know, is they had frequented all my nightclubs, and okay, one of them had actually worked for me when I was 20, and he had a summer off from college. Quick, long story short, my buddy Phil needed a job, and I paid him $200 a week to make me laugh. I know this sounds crazy now, but we were 20 years old, and I was making tons of money hanging out with supermodels, and I think what they thought was, whether I was bright or not, maybe I had a gift for business because I showed it from a young age.
My guess is, yeah, they saw whatever everyone else sees.
I mean, they're both bright guys in their own right, but for whatever reason, they were willing to take a shot on me, and it worked out. And to move on a little bit more swiftly, we started doing quite a few deals and became known for SPACs. We really kind of helped create SPACs be a concept on Wall Street. Basically creating private equity within a public equity. And that's what a SPAC is. in essence. And we did 2 brand name deals that became very well known on Wall Street that were hugely successful early on, Jamba Juice and American Apparel, and then continued to do a lot of venture capital. Now we move to about 2000. The market crashes. I'm certainly not experienced at what's going on. And I'm trying to figure out, okay, I run a book of clients. What do I do? Where do I invest? How do I stay safe? And my biggest problem was I didn't want to lose people money. I still had this like conscience where I couldn't wake up every day if I didn't fully feel comfortable with what I was doing. And I didn't. I knew I wasn't knowledgeable enough to run money in a real way. I didn't want to be a stockbroker just selling them stock. I wanted to feel good about what I was selling and want to put my own money in. And I wasn't there yet. So what I decided to do is forego commissions, do nothing, and trade my own account to make a living. I did it. And I did it really successfully. And then even more successfully. And then I turned hundreds of thousands into millions, but that's while the market's kind of crashing. So me and my partners are looking, saying, you might actually have a talent at this. Like, you may not be a stockbroker. And I'm like, thank God, because I don't want to be a stockbroker. And we continue. And they said, well, here's a problem. The firm might go out of business. We're not doing commissions. And not just you, the market's crashed. Here you are trading money. And we have to have a certain amount of money in the bank just to stay in business. It's called net capital requirements. So they said, take the firm's money and trade it, because we actually need more money. And we've been asking family and friends to help fund us just to stay in business. So we're that desperate. So instead of worrying about yourself, let's be a team player. I said, okay. I mean, that's fair. They gave me a few $100,000 and it doubled pretty quickly. Kept going. And they said, okay, that's pretty goddamn like unbelievable. You're good. Now give us some money back. I was like, but we're having so much fun. They're like, yeah, we need to stay in business. Got to go in the bank now, or we'll be closed. I said, oh, okay, that game's over. Go back to trading my money. And they said, you should really stop all this and you should open up a hedge fund. And I said, okay, Vassar College, drama major, nightclubs. What makes me fucking qualified to open up a hedge fund? Like, this is the funniest thing in the world. They're like, because you know what you're doing, whether or not you were groomed for it, whether or not that's how your path was foreseen by you or family, that's where you are. And I thought about it and I said, you know what? They might have a point here. So I raised a small amount of capital, wasn't much. I think it was under 10 million, 7, 8 million, something like that. So let's try this out. And I did it. I did pretty well. And now to continue, some trials and tribulations, not really with my money, meaning I was doing well. It was the pressure of having to deal with other people's money. Because once again, I was still going through that same thing. I could do anything with my money if I felt comfortable, but worrying about other people, that became an issue. So I had to kick certain people out of my fund that were, let's say, demanding and always asking questions. And I found that I didn't perform as well under that pressure. I didn't lose money. I was just way too conservative for my talent. So I kicked a bunch of people out, and we did unbelievable numbers all through, like, even in 2009 during that big crash was one of my best years. It was up several 100%.
That was one of my worst years in my investment, in my passive investment.
And that's when I really realized, like, I'm good with markets and volatility. And what I did is I said, I don't want to just be, a shot in the pan. I want to know what I'm doing. So I read everything and I called every friend. And I was lucky enough, one of my best friends was running Soros's money. Another buddy was like the biggest guy at Lazard. And they were like, wow, you're real in finance. Do you know what you're doing? I said, I think I do, but I'm not going to pretend. So I would ask questions and read and just kept learning on the job. And I made so many mistakes the first 10 years with other people's money, but now I was starting to learn, and I would just stay in my comfort zone, and I was killing it. Then I found myself just bored from time to time, not with my job, but with the long days and what to do, because really money management, like proper management, is supposed to be boring. You're not supposed to overtrade, and you're supposed to let winners run and cut losers quickly, which in the end means it's actually a boring process if you're doing it right. So I found myself overtrading, and with no signal. I could be long or short 20,000 spies and lose like 10, 20 grand intraday for no reason, just because I was bored. And someone told me about a community that T3 had where this fellow Scott Redler had a chat. I said, let's try this out, right? The only other thing I was doing at the time, just a backstep for a bit, was still my venture capital. We were doing deals, and I was hoping a few would go public, and I'm running the fund, and I find Redler's Chat, and nice people. Everyone's perfectly fine. Scott's a really good guy, and he has a very conservative way of making money, staying with trends, not having any big losses. I thought this is great. But what I found was I was really managing my own money, and it became a job, right? So 6-7 years, I was giving ideas, what I'm doing, how I'm doing, where I'm entering, where I'm exiting. And it was cool. I was helping a lot of people. People are thanking me on the side. People are sending me presents. But I was like, I wasn't getting paid for it. I was just doing it. I went on for 6 or 7 years, and I said, this is cool, but now I'm exhausted. Why the hell do I do this? Like, I'm not Mother Teresa. I'm a nice guy.
And I think what else happened was during COVID, people like me, there was this whole new group of people joining Redler's Chat and joining all these chats. So you probably had all of a sudden double the people messaging you.
And there were like these Facebook groups where people contact me, and Telegram and Instagram. And I was like, I'm losing my mind. I don't get paid for this. What the hell? Okay. And wouldn't it be nice if guys gave me ideas? I'm not the smartest guy in the room. It's got to be a place where I can create, where other funds like mine and family offices and really solid traders, and there's tons of them out there, can share idea flow, and I get ideas myself, rather than for 7 years it be only my ideas. I got to let a dog out. So what I did is I created that via a place called the Inner Circle, where we, luckily enough, were able to continue our relationship. And in doing this, COVID hit. And that's kind of where I'm good, right? Is looking at drama within the market and maybe within our society, and figuring out how best to protect myself and also potentially go on the offense and make a lot of money. So during COVID, I made a few big bets. I really looked at the market as a binary event as a whole, meaning we're going through one of the most emotional, difficult periods in U.S. history, right? Like a once in a century event. So a lot of other people are talking about, well, this company won't make earnings, and we don't know when it'll get better, and how can you pay price to sales on this? And I said, you can throw all that out the window. Like, let's really figure this out. We don't know where we're going to be in a year, but I do know Amazon probably became the most important, dominant company in the history of America at this very moment in time. Not Apple, not Microsoft, but indeed Amazon, because our way of life, if it is to continue, is all done via them. So while Amazon's crashing 200-300 points a day, it became my largest position. And I made a few other bets, and I was lucky enough that they did very well. In fact, one of them was this, like, while I was making those plays that had to do with COVID and how we would respond, including Shopify, took one small bet on what I perceived the street would call the next Tesla. And I openly told people, I said, I don't know if it's the next Tesla. I don't even know if they're in business 2 years. But I know how the human mind works, and they're going to go nuts for this little company, this SPAC. So I started buying thousands, literally tens of thousands of shares of a company called Nikola, which was VTIQ. A lot of people followed me. They said, like, this sounds crazy, but we know you're good. But like, why during COVID you're buying some SPAC hand over fist? And I said, listen, I know my emotion set, right? I know who I am. And if I'm right, and this becomes the next Tesla, which means you're hearing about it on CNBC, it's going up 5-10 points a day, I'm not going to chase it. I'm going to feel like it's too late. So I did my work now. And I can't tell you if my idea comes to fruition in 4 weeks or if 8 weeks or 12 weeks, but I know if I'm positioned here, the upside is so grand, I have to have a position. So I had that, Shopify, Amazon, and things worked out well. And I said, it's all taking so much energy out of me. I'm going to start this chat. I'm going to start a place where everyone can share together. I can do these ideas. Maybe I don't have to hold everyone's hand, because I'm going to walk everyone through while I'm doing it. And wouldn't it be nice if other ideas come in? And who knows, maybe I'll make some money out of it. But that's kind of like, if you're trading for real, that's kind of almost the last thing you care about, because we're always going to make way more money in trading. But I thought, if it actually becomes a profitable business too, awesome. Everyone wins. But most of all, it'll take the pressure off answering 30 different people on 30 different chats on 30 different social media platforms. So we started that. That's where we got close. And I was lucky enough that then my venture capital business became very real. And we had 3 or 4 exits during 2021 to continue my bio. And one of our big biotech investments called Immunome went public at $9. And at one point during COVID, made a deal with the US government and traded as high as 94 in pre-market. That day it closed well below 50, but it was still a huge win for us. Then we basically created the largest cannabis company to ever go public via the US. All these companies were going public through Canada. We focused on the picks and shovels, and we financed one of the largest hydroponics plays there was in the industry. We did it at about a $250 million valuation in the private markets, went public through JP Morgan as a $1 billion company. Its market cap went to 2 or 3 billion. All the private investors made 7-8 times their money. And we continued. Vroom was another big deal that we were in. We were first money in Vroom. So we're talking $100 million valuation after being public. It was 5 billion. And rather than give you a song and dance and story, I've lost money on deals too. But as a merchant bank, the name of my firm, Broadband, we really became one of the better firms on Wall Street. So I had the venture capital working. I finally had this place, Inner Circle, where I could share idea flow and maybe make my life less hard. Turns out it made it more difficult, but I built some of the most solid friendships I ever thought I'd have virtually online, which is pretty wild. And then you came along one day after making, which hopefully you'll walk everyone through. You made millions of dollars from being kind of someone who didn't know your ass from your elbow in the stock market. And we thought, wow, Jesse can do this. And if you are such a pro on DraftKings, and if I have about 30 friends who play DraftKings every single week and lose money, and you actually made it a bona fide serious business where year in, year out, you make a living at it beyond just winning the championship for 2 million and then coming back, by the way, which you didn't tell these people. And the second year coming in second, I don't want to, what did you still won over 7 figures that year, right?
Yeah. 2 years later. Yeah.
Okay. So you had mentioned the podcast and I thought, okay, so I do that. You do DraftKings. And as an aside, since 2003, my passion's been art. And one of my largest trades in the history of my trading career was in the art market. What if we get together and talk about it? And it's not just graphs and charts and the 200-day moving average and why this company is cheap versus its growth rate, but talk about how we really found success, like why Amazon became my biggest position during COVID, which had nothing to do with earnings, or why VTIQ became my largest position because I thought the human nature in wanting the next Tesla would become the biggest trade. And I think you saw that and thought, wow, if we could share that with people, it might be cool.
Yeah. And I'll just say that, but I didn't go much through my finance or my trading background, which, there isn't much of one beyond, my cousin who I'm close to, ran a hedge fund and went to Harvard Business School. And I read all the Market Wizards books, 15 years ago. And
by the way.
Yeah. And I read some other books. I got interested in it at one point, but I never once, woke up with a market, day traded or, swing trade. I would buy 6 to 8 names and, try to hold them unless I didn't know anything about charts. I still don't really
Time
know.
out. While you pretend you didn't know, why don't you tell them about what you did with GameStop? Because a lot of people talk about it, but a lot of people didn't make that much money on it. They were just like totally enamored. And the people that did make money, most of them gave it away. So that might be a good story to share.
Yeah, I don't know if it's an impressive story, but I guess it's an interesting story. To be completely honest, so like I said, I'm in a bunch of these different rooms, and one of the reasons I know that you're the best is because I'm in 7 or 8 different rooms, and Inner Circle's front and center for me, but there's all these different rooms that I'm in, and kind of like I do in DraftKings or poker, I can find little pieces of information that I find valuable. And one of the other rooms, the guy said, "Hey, I'm," and he's a serious guy. He said, "I'm buying GME," and so I bought 2,000 shares of GME. I actually don't even. I guess I could reverse engineer it. I must have bought it at maybe 50, 48 or something like that. There's really not much of a story to it. I told you at some point that I was in it. I don't think I told you right away, because I think you would have told me, or I don't know what you would have told me, but I didn't tell you right away.
I definitely would have said, "Be careful." Who knows the rest? That I would have said.
And then I think at one point, I was, yeah, and
you were nearly up $1 million on that investment at one point, right?
No, I think I made 400, 450. I mean, I bought 2,000 shares at 50 and sold them at 250. I think.
Okay. So, I don't know why I thought you even got bigger at some point.
I think it was just 2,000 shares and never selling and until I sold it all in one day.
That in itself, holding it to 250 and then knowing at one point to not drink the Kool-Aid and get out, to me.
Right. Well, the funny thing is, I don't think I would. I mean, you helped me so much, because back then I didn't know. I mean, now I still don't know what I'm doing, but I at least I feel like
insanity when you see it now. You could look back and say, "Oh, okay, that was wild."
Or even like I'd be like, I have to trim a third here. Like I would have sold too much before. I just would have got out of it at some point. I would have, and I would have thought I had a home run, which I would have. But back then I was like, well, almost every day I wake up, I'm up another 15,000 in this name, and I guess I'm just not going to sell until and then one day I sold.
What made you sell? Do you remember?
I mean, to be honest, because EO sold.
Is that what? Hey, that's
yeah.
enough. Okay.
And then he ended up having about 6 or 7 names. One of them that I got in that went down 80% after that, trying to recreate it. But
during that time, I had this run of those EV SPACs where it was the Nikola, then HYGS, followed by XL.
XL, yeah.
And I honestly have no clue before I'm asking this. Did you make the same sort of dollar gains in that? Because that was one of my biggest runs where people were like, what are you doing? I'm curious. How did that translate?
XL, because at this point, I trusted you. Probably
I should backtrack. Basically, I was right. Everyone wanted the next Tesla. It became Nikola. And then I saw other mini EV SPAC possibilities where I could take advantage of this trend, but also know it was a cute little trend and most of these might not be real. So we kept getting the advantage.
I'll be honest, with VTIQ, I didn't know you as well at the time. I knew you're in VTIQ. I was also in it, but I was pretty small. I still had my buddy telling me that it was a scam company, which it was.
Absolutely.
You knew it was a scam company too, but you were pretty sure.
There's a difference between being comfortable. I mean, you hear a scam, who the hell wants to buy it?
Right. So I had a little, but I didn't crush it on that one. But then once I think it was SHLL or XL, I think it's the same name. They switched it. Yeah. And you gave the whole story. You said you when the guy came on CNBC, you explained that the guy.
The SPACs with him actually, like over a decade prior, John Ledecky, who is a no joke heavy hitter, right? And I said, this guy, Kramer will one day talk about him. And if there's a SPAC that can go up 200-300%, it's with a brand name CEO like John Ledecky.
And not to mention back then, you probably knew it could happen, but I was kind of under the impression that, that it was trading at like 1040, 1050. And SPACs at that point still hadn't really gone below $10.
Right.
Eventually
nothing was breaking that bid.
Right. Eventually that barrier broke, but for a while a SPAC would just hold $10 no matter what during the craziness. So I was like, I'm just, and I also, as a self-employed professional gambler, I have an SEP IRA, which I've contributed to, every year, since I started gambling. Which I'm lucky. Whoever gave me that advice, I'm lucky that I did that. So I just had all this cash in that IRA, and I just kept adding shares in there. I was like, DP thinks eventually it's gonna go up to at least 18, 19. I think
it was a huge hit.
Yeah, and then it went to 35. Yeah, no, that one I made as much or more than GME, especially in my IRA. I mean that thing turned my IRA into turbo. So that was a great one.
So for the sake of our newfound podcast, should we start talking about today?
Yeah, and to lead into that, one thing I'll say is, so back then it was craziness, and it was pretty much me not knowing what was going on, knowing that David knew what was going on, and pretty much just clicking buttons and following him. And then, as most people who are probably watching know, the market has changed, and it came down. It became more real. It got
valuation conscious,
right,
interest rates. All
right.
of a sudden, fundamentals matter.
Right. So all of a sudden, we're actually trading until about a week ago, when all of a sudden it's crazy again. But yeah, so it's been. We just talked about some of my big wins. I've also made some huge mistakes along the way because, and I knew it, and you told me, and other people. But I'm smart enough. I guess I'll give myself credit. I knew that it was craziness, and I knew that I was in the right place at the right time, and that when it became real, I was going to really have to learn the business or learn what I'm doing, or I was going to be in trouble. What I didn't, but I still made some mistakes because I didn't realize how real it was going to get. And I didn't.
Right,
realize,
you think about it, but it doesn't make you necessarily employ like I got to change today. Just
right.
I got to start to take things more seriously eventually.
Yeah, exactly. So I had that moment, and I had that. Okay, now I haven't played poker since 2020, and I do still play DraftKings a little. But if you're not taking daily fantasy sports super seriously, full time, yeah, you can make money at it, but it's hard to rely on it to pay your mortgage, pay your kids' private school, all that other stuff. So I was like, so I was in a spot where I was like, I have to learn this now, or it's back to professional gambling, which, as much as I used to, that's all I wanted to do. Now I really don't want to go back. So.
There's something people always say. When you are pressured to make money as a new trader, investor, and it's a must, most people fail. Yeah. How did you avoid that?
Well, for a little
really bit, it's commonplace when you need money, when you say, I have to be successful at this.
Yeah.
Versus I'm willing to be, and I'll put in the time, but I have to now get a job because I have no other way. Sure. That usually backfires. It didn't backfire.
It didn't. I mean, I think it, in some ways, I mean, I had some days where they called in poker tilt, where I tilted, and, I bought too much of one stock, and then, maybe even you bought the stock, but then like I would add more when it went down more, and, when you weren't doing it, or I would get out of it in a fury. I made those mistakes along the way, but I've also, there's two sides to it. Also, when you have a family and you have a mortgage and you have a kid, sometimes
you have the discipline to not lose the
money. At some point, you have to tell yourself, okay, like it's time to get serious. And I feel, and I think a lot of professional poker players, or maybe gamblers in general, are like this too. A lot of times, I feel like I perform my best when my back's up against the wall, and I don't think either of us are painting it like my back was up against the wall. I had a bunch of savings and all that stuff, but it did come a point where the way my back was up against the wall was I have to prove to myself that I can do this outside of the craziness, or I have to go do something else. It's not like I was going to be on the street, but I would have to be honest.
Go back to poker or something, which you're damn good at, but. Right. You obviously were transitioning, and you had to figure out if you can continue that transition or if it was a very short-term pit stop, I guess.
Exactly. And I really only learned over the last, 10 or 11, 12 months that there was a process I could follow, and that now I am confident. I'm close to my parents, and I talk to my dad, and he's a very frugal, rational guy, and he always asks me, are you confident? He understands markets to a point too, and he knew it was crazy during COVID, and he knew his savings were going nuts, and he knew that, and he's been around for a while. He knows that's not always going to happen. He's like, can you make money
without the incentive
when the S&P is flat for a year, or that kind of stuff. So it's been fun to finally, while I'm still far from an expert, at least I'm confident with you and with Inner Circle and with my resources that I can find situations. And there's a poker player, and you might not get this reference, but poker players will, who said says the markets are kind of like poker without an ante, because the good thing about stock market is you can just sit there all day and do nothing, and you don't lose money. In poker, if you fold all day, you're losing every time
you can't play a hand without having a bet up, right?
Right. Yeah. You lose a little bit every time, but in the markets, you can wait for your spot. And that's what I've learned to do. And we find usually most days we find these spots. It's not like I'm going days without making trades, but not forcing it has been, really the key for everything for me.
I always tell people that if you figure out that you trade less shares, are more patient, and size up in your high conviction ideas, you end up making more money. Maybe a little bit more boring, but you make a hell of a lot more money. Should we talk about some of the individual names?
Yeah, let's do that. So this little intro and storytelling, I think is valuable for listeners, but clearly we're not going to do this every episode. So
good way to give you a template where we come from those that just found us by chance.
Yeah, but hopefully what we can do going forward, and we're going to try to do this every Monday and release it either Monday night or Tuesday, is talk about a little bit of what happened last week, or what we can, and why what happened last week affects what's going to happen this week. So
basically give some relevant content that people actually might care about and might help them in whatever they're doing in the market.
Right. So last week was all about one stock, and anyone who is paying attention knows that, and that stock was SMCI. And there's a couple different ways we could approach it. I guess I'll give a little backdrop that basically, there's a lot of people, SMCI was a stock that we bought, through David, obviously at 340 after they gave positive guidance, but before their earnings.
Yeah,
and David
announced a huge quarter.
Yeah, and David quickly identified that the news was very important, and that it went from 300 to 340 on that news, but that was just the tip of the iceberg, and it was actually I think still, even after this week, that first trade was my biggest trade of the year, 340 to pretty much 480, with David kind of, which he doesn't do all the time, just kind of yelling into the mic on Inner Circle, don't sell too fast. Don't sell too fast. Like this one.
I had a lot of conviction this was early in its trajectory.
Yeah, this is one you're going to hold. So anyway, so we sold at 480. We made a ton of money. We were geniuses. Then somehow the stock went all the way to, let's say 900. And then at that point, David, you finally started to think about the short side, and then you can, I guess.
So first off, I did what I'm famous for. I mean, I literally am becoming famous, entering better than most, and maybe taking profits off the table too soon. There's something to be said for holding a trailer.
I will say we did find a few spots.
Yeah, no, we added, like, one's getting flat at 480. There were a couple times it ran to mid 500s to pull back to 490, and we were back in, and we bought calls. We did not miss the next 400, but to be really clear about this, at 340, that evening before the next trading day, I said, tomorrow's focus is all SMCI. Either this company is a fraudulent company that is not real, or it has to be over 400, like right away. It's trading 15, 16 times earnings, even up 30 points tonight, and makes 0 cents. So this is my complete focus. And we wrote it. We wrote it hard. And that day, it went well over 400, and there were people selling. And I said, I know this feels like the trade of your life, but if you really look at what's happening, you need to hold some. So we did a pretty good job up till we got to about 500. But then we got to 900, and I looked and I realized it was one of the 2 or 3 most overheated stocks I had ever seen in my life. Overheated does not mean overvalued. This is a company with both earnings and amazing revenue growth, but literally it's overbought readings I had not seen but one time in my life with GameStop. Now there's a difference. This is not GameStop. This is very real. It's right in the back of NVIDIA. Sorry. Were you going to say something?
Well, I just wanted to add that this is where your talent comes in. Because for me, this is real money, and if I'm going to enter the trade, I'm going to risk some real money. And as not an expert, what scared me was this is acting like GameStop. I know what happened with GameStop, but this company's real. This company's connected to NVIDIA how does David know? Or is he, how does he know that eventually this is going to pull back?
So
why can't it go 1400?
What I basically said was to myself, but other people that follow me and listen to me, like Jesse, it is actually easier for me to identify that once we got to 97 relative strength. 96 is when I started taking it seriously and putting on shorts, mid 900s, and Friday morning was a little painful because we were over 1,000. But where I felt comfortable in my prediction that it would really come in, I don't want to just pretend I said this, but I think I told Jesse the next 200 points is to the downside.
At 1,000, someone messaged you, and you said, and they I guess they weren't following you that day or whatever, and they're like, "Oh wow, SMCI 1,000." He's like, "Yeah, we're trading it every day. By the way, the next 200 is to the downside."
I was with Enrique. Yep.
Yeah.
So basically, it was a little easier than GME, and the reason why is because we're talking about at that point a $50 billion company, and the law of large numbers in very short-term increments does matter. Meaning, a $50 billion company can't just go to 75 billion and then 100 billion, because it's not like the stock's locked up. Where GME was still a pretty tiny company as all this was happening. The short was way bigger than the float at one point, I think, or close to it. So the dynamics are even harder to figure out when it would finally pull back. When I saw what was the equivalent of the second largest reading in RSIs that I've seen in a 30-year career, I said, that first pullback is going to be vicious. I'm not looking for it to go to 500 or 600 or 700, but it could go from over 1,000 to 800 in a couple ticks. And that could be the most meaningful trade of the year if we play it right. So I let everyone know. I said, listen, this is big boy and girl stuff, which means that you can totally avoid it. Like, you don't have to do this trade. There are a ton of people where it's not appropriate for any small account. And I kept screaming that all week.
And it was hard, even though it went down 200 pretty fast. It did have a couple 20s ups, and if you're not experienced, that could scare you out real fast.
Scare the hell out of you. So I kept telling people, one, this is not a stock to be short any real size overnight. Even myself, I was telling people, I'm not shorting 2,000-3,000 shares overnight. That's going to happen when I feel literally 90% sure intraday it's about to flush, and then I'm willing to take some size. Otherwise, my size was coming through puts, the 900s and the 750s, and I wasn't going out more than either that Friday, which was a day away, or the following week. And this way, if I lost, at least they knew what I could lose. I kept reminding people, as much as I felt strong about this trade, this is all based on human emotion. And human emotion is something you can't quantify. So if you're starting to size up because you assume I have to be right, what if it takes me till Monday or Tuesday to be right, and it goes to 1,200 first, and your bank's blown up? So
but I will say it.
First and foremost, I tried to explain to people, I think the time is now, but I could be wrong by a day. So I positioned based on that till I felt like it's time to press go. Sorry, what were you about to say?
Pretty much that. Just that there was a point on Friday where you went from, I think it's going to happen at some point, to like, now's the time.
Right. And then, frankly, as it was breaking and crossing 1,000, same way we talked about at 370, 380, this is just beginning. Yeah. Please make some money on this. This could easily be, and I'm the first guy to say it. I didn't say 800 today, but as it was at 1,000, I said there's zero reason this can't be under 900 today.
Yeah.
So that trade, I mean, the reason we're alluding to it, and by the way, we weren't the only people on the street to do it, but it did scare a lot of people. So there were people that avoided it. We were buying $900 puts at like $3. Now, I had so much stock, I was actually still in my puts from Thursday. I said, that's enough. So I actually miss adding those puts on the what we call lotto same day puts. But some of those puts for people on Inner Circle literally went from 3 to 100, which was complete insanity. I don't know if we'll find that next week. Yeah. The stock itself went all the way to 800 at a, just being clear about it. I think I covered by 880, 890 is my guess. Do you remember? I think it was about
860, I think. 865, I think.
Okay. That sounds even better. But I know the point is I don't get bottoms or tops.
Yeah, sure.
Which is what I want to talk about here. I told everyone this trade, you have to be willing to be down. If you're looking for the big win and you're shorting the hottest stock in the market, 90% of the people shouldn't do it. And the 10% that do, better beware that they're going to need to be down 20 grand to make 80 or 100. They're going to be down 50 to make 200 or 300. It's just the nature of a stock like that. I am not going to top ticket within 2 or 3 points. You might miss it by 20 points, but if the upside's really hundreds of points, then it's worthwhile. But for 90% of the kids out there and adults, there's no reason to play with fire like this.
Yeah, and I will say one other thing. And honestly, this podcast, at least for me, and I don't think for you either, it's certainly our main goal is not just to promote Inner Circle. I mean, my main goal for the podcast, I love Inner Circle, and I'm always willing to promote it. But my main goal is just for you to get your ideas out, and for people to see that type of stuff. But I will say that, I'm a member of all these different groups, and maybe one of them at one point found a short in SMCI. But you're the only guy out there who is willing to just go out there and say, I'm shorting it. Like you just said, it's probably going to go up more. And I'm waiting for that signal. And that's, and I think that's probably because you kind of fell into this business. You didn't write out this whole business plan. No. I'm going to run a trading room and make, X, and this amount a year and do it for, you just kind of threw out a price point and in a room. And,
yeah, it was trial by error, right? It was many years of late 90s losing lots of money, making some really dumb mistakes.
That's why, me and a bunch of others feel so lucky to have found you, because there's real trading going on. And I guess I call it real trading, but some of it's unique trading, because people looking at a chart, I don't think are gonna be shorting SMCI until they finally maybe see that trigger, and then they'll try to scalp it for for some points or whatever. But
I think what it comes down to is recognizing I'm not the intellectual genius, and that a lot of what moves stocks, especially in the short term, has nothing to do with balance sheets or anything else. Earnings, of course, always matter. That's why we've seen the move in NVIDIA. But understanding emotion, especially short-term action, runs everything. And that's my edge, is being able to read emotions, understand when they've gotten too hot, too negative. We know we were buying in December 22, and just continue to focus on what I'm decent at and not try and think too far out of what is my wheelhouse. Like, if it's in my wheelhouse and emotion is ruling the stock and crazy things are happening, then I better take advantage of it, because that's where I have an edge. So it's just kind of sticking with the edge. Should we talk about NVIDIA's earnings?
I do want to say one quick thing. So just as a foreshadow to a different podcast, there's all these little things that you do that really impressed me, I'm always impressed, but just really intrigued me. And I almost just a note for us. I want to talk about, not now, but maybe next episode, when SMCI that day, it was at 360, and you're telling me it's going to go up. And like, I'm thinking, okay, so should we buy? And you're like, well, I'm pretty sure it's going to pull back at the open, and we buy it at 340, 345. It's like, but what if, like in my mind, it's like, well, what if he's wrong? Like, I just want to make the,
right. You don't want to miss the big trade.
Right. But, and at the open, boom, just came right into like 342. And that's when I was
actually, like, 338 was the low, that
or whatever it was. I was like,
okay. I only know because I said, I'm going to buy most of my position if I can under 340. And the minute I saw 339, I'm like, well, you said it, you better start buying.
Yeah, so I think we hold off, and you could explain how you knew that was going to happen some other time. But
yeah, okay. I didn't know. That was my guess, but yeah.
Right. That's the type of stuff that I feel that's like the edge that
what I will say, just as preamble to whenever we do it, so much of it is just being willing to absorb experience, and rather than just go through the experience, actually absorb it, learn from it, and employ it when it comes up again. And that's really what it's about, is taking these, because these are patterns that we see over and over and over, just a different decade or a different, one day it's internet, one day it's biotech, one day it's AI. For a while it was genetics and biotech. And the patterns really turn out to be so similar that if you recognize those patterns, you can kind of have a little edge as to how something will play out, especially with short-term price action, because the very same people are trading them, right? So the same behaviors come up over and over and over. So the very fast answer is because I've gone through it before. Just a different symbol and a different industry.
Yeah. So SMCI, I lived, and I can talk about that one decently. NVIDIA, I'm not an earnings guy. I'm not going to be able to tell you who's going to beat earnings, why they're going to beat earnings, and any of that. So I'm not even totally sure. I know we will have good stuff to talk about, but I'm going to kind of leave it up to you. But I will say that Wednesday is NVIDIA earnings, and it's the
market,
the most meaningful stock in the market these days. And so I guess, one, do you have any thoughts on playing it for earnings? And then I think more importantly, how do you think leading up to earnings and then after earnings will affect the rest of the market?
So I almost don't care about whether I'm in the stock for earnings via stock, calls, puts. What I think is most important is that it really is the market. AI is such a powerful trend right now that the entire market rests upon it. Apple is no longer the most important company in the market. I mean, it isn't. Literally, Microsoft has overtaken it as most valuable, but more importantly, the market's results this year are all based upon the AI thing, right? So what NVIDIA does, how it reacts, and the pin action to stocks like SMCI and Broadcom and AMD that have all had massive gains this year, that's my focus and what's going to be most important to me on Wednesday. Hopefully you remember this. In late December, because everyone's talking about Mag 7 and what will happen this year. And I said, I'm not like a Mag 7 guy for 2024, but there are two names I feel really confident in. I think NVIDIA, after basing for what seemed like forever, but in fact it was a year in the 400s, is still cheap versus its growth rate. It's still trading low 20s, still growing well above where its PE is, and still has literally just their coffers full of orders and can't meet demand. So to me, it's a no-brainer at some point to take out the upside resistance of 500 and go to at least 600-700, right? I don't know if I ever said 750, but I thought the breakout would be big because it had such a long base. And as we like to say, the longer the base, the bigger the chase. And boy, it was a huge chase above 500. And I said the other big one was Amazon. But here we are, and now it's 740. So what I think really, and the problem here is the whole street, I think, agrees with me, is there's a lot built in. Right. So if he gives out free ice cream, if he gives out free leather jackets, if he says, listen, I still can't meet demand, it still may not be enough for the stock to go higher. That said, it's not egregious in valuation, but it has built in a lot, meaning it can't be about a year. Right now, the stock is building in what has to be a 3 or 4 or 5 year span of orders, right? Of 30-40% growth. And people have to question, can this type of growth continue beyond the next 12 to 18 months? And most likely no, because the law of large numbers takes over and there will be a cooling off period. So how to play it, in my eyes, is going to be probably afterwards to figure out, my gut, as the stock comes in. Even though it's agreed upon, and sometimes when something's too agreed upon, I fade the masses because the masses are usually wrong in the market.
Sure.
In this case, it just feels like a lot's built in. And we've seen it a couple times in previous earnings reports where solid numbers were sold off. The question probably is going to be more so, where to buy it, and does the pin action offer as much of an opportunity as NVIDIA itself, i.e. an SMCI?
Right.
So I think my focus is going to be AMD, SMCI, Broadcom, and how some of these AI-related companies trade in relation to NVIDIA. And then beyond all of that, does it start a much-needed correction of 5, 7, 8% in the market, which the market desperately deserves? We now know that the Fed is not cutting rates 5 or 6 times this year. We now know that it ain't happening in March. We now know that the PE on the S&P is higher than it's been in many years. And at any given time in previous history, when it trades above 20 times like this, the returns tend to not be so great. So we're at a point now where I don't want to talk my book, right? Because I have I'm not short out the wazoo or anything, but I have a little less positions outside of biotech and immunome and some names. But my point here is, I think the market's due for a rest and probably some downside. And that's what I want to happen. Right. But it seems like a logical reason for it to all happen. And then on top of it, we have some Fed minutes on Wednesday as well. So the way I'm approaching NVIDIA short is, does it give us the much needed breather that the market so desperately needs right now? The market needs it in stocks like SMCI. The market needs it in stocks like Goldman Sachs, though it doesn't relate. All these stocks have done nothing but go higher. And then, is there some rotation during that period? Who knows? Maybe that's where IWM says, you know what? I'm going to take the lead for a few, and I'm going to break out of 205 and have that much vaulted breakout that everyone's like hoping is going to happen. Because at moments like that, the market doesn't all have to come in. It might be a rest for big cap tech in the Qs, while something like an XBI or an XLF or an IWM take over for a bit. So funny enough, NVIDIA's earnings are much more about, does it provide a market pause, correction, or some buy opportunities in other stocks? NVIDIA itself would have to be to the mid or lower 600s for me to be interested.
And that's the fun thing about the market right now, that as I get more experience, I'm realizing you don't have to predict what NVIDIA is going to do, because whatever it does, especially when I'm, when I have access to you and when I'm, when I'm trading day to day and you're waking up with a market, it's going to affect enough things that there's going to be things to trade off whatever it does.
And sometimes even with greater percentage moves. Someone today said, so how are you going to play NVIDIA? And I said, I don't know yet.
Right.
But I do know that I don't have to. Like, I try and teach people, and I know I've learned, just because NVIDIA is reporting doesn't mean we have to trade it. And, just because the Fed has an FOMC day and they're about to announce their policy, change or no change, you don't have to trade the SPYs or Qs. So I'm excited because I think it's going to really give the market a lot of direction, but more so because of the opportunity it might provide if it sells off, or for other stocks or the market, because we've come a long way. And because maybe it'll force people to take a further look at something like XBI and small cap biotech and some other names that might be able to shine. Well, sometimes what happens, funny enough, and I don't know if you remember me talking about this, the other day we had a hot economic report. I don't remember if it was CPI or PPI. And I said, guys, some of these big cap stocks are going to go up today. Right. And while the market's selling off, some of them are actually going to be helped, because now, once again, no one wants to buy small cap and no one wants to buy biotech. And now there's only 7 or 8 companies that can technically, it's narrative. We don't know this for fact, but the narrative is bigger, best in breed companies like Amazon and Microsoft have proven, even in high inflationary environments where rates aren't being cut, to still outperform. So all the machines say, we're going to buy those again. Well, wouldn't it be nice if maybe the machines change their mind, and this makes people say, you know what? I've been looking at small caps, and the underperformance is at an extent we've never seen in the history of the markets since IWM exists, which is only a few decades. Maybe it's time to see some buying, or maybe it's an XLF. So that's what I'm, not to be too granular, but that's what I'm looking for this week, is at least for NVIDIA to provide opportunity, whether it's in NVIDIA itself or not. I don't care so much. It's no longer a must-own sheet. At 500, after that huge base, I felt very secure in saying, we got to own some NVIDIA, as we did. But per usual, I sold too soon. I got to fix that habit. But yeah.
I think knowing you, for my sake, I'm hoping it comes down, because you're going to find, whether it's a scalp or a long-term buy, you're going to find some point to buy it.
That'll be part of it. I mean, and as you know, we always play, what is the street pricing in, in terms of percentage moves? And in this case, it's 730. It's something like literally 110, 120 points, right? I think it's between 10 and 12%. So there's going to be a lot of meat on the bone if we play it right. So that very well might be the case. That it'll be a great buying opportunity. Who knows? I don't think we'll do it, but it might be a great short opportunity where it's built in and it's up too much.
That's true. It could, yeah.
I just know that I guess the pin action and the way the markets trade will be pretty vicious off of it. If you put in that, we also have Palo Alto reporting. We have some huge retailers and Walmart and Home Depot, and then we have the Fed minutes. So this is like the week. I said previously that FANG week was the biggest week. This week equals that because of the importance AI is taking. This might be the week.
I'm a little nervous because it's raining pretty hard out here, and I'm hoping I'm hoping everything.
I'll if I have to enter orders for you, I will. I'm wondering, just you tell me. I feel like first time around going over what's important in the market, it's pretty solid, and we could talk about biotech and some deals. I'm wondering if we lead in with that next time around because we really have some great content for it. And what
I think so. I think we pushed the rest of the outline to episode number 2.
You agree? This was fun. I'm happy we did it.
For sure.
Well, everyone, thanks for joining us on our first episode. All 2 or 3 of you. No, I'm teasing, but it was fun. Thanks for pushing me to do it, Jesse.
Yeah, thanks for it was definitely fun, and selfishly, it's great to be able to kind of corner you and be able to ask you questions. So it's
there you go. All the ones that maybe you were worried to ask me offline, you'd be like, he can't tell me to go F myself right now. So there you go.
Yep.
So we're going to be doing this every Monday and released on Tuesday is what we think we're going to be
doing.
I
think super early Tuesday. I mean, I guess I'm hoping maybe Monday night so you can wake up for it Tuesday morning, so traders can wake up for it Tuesday morning.
And we're going to have, I'm lucky enough to have a lot of friends. I'm a nobody, but some friends who are big time players in the industry and maybe some CEOs, who knows if they're comfortable. We'll do some guests along the way, I assume, as well.
For sure. Yeah.
How about any of your famous poker friends? You think we could throw one on?
Definitely. Yeah, no, I have a list. I have a list that's made, and I don't think we'll rely on guests every episode, but I think we can definitely find some very valuable ones.
Wait, I have one. Can we do an episode where you talk a little bit about that drama with the lady everyone thought was cheating? We should talk about that one day. Or is that like a taboo thing?
It's not taboo. Sure. If that's what you want to talk about, we could. It's a very covered topic, but
it might have been bastardized. I get it.
Maybe we could bring some. Yeah, I'll have to think about how to approach that one.
Okay.
Yeah, maybe.
Thanks for joining us, everyone. We will see you next week.
All right. Thanks a lot.
Take care.